Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning as usual on May 16th. So it's been a great week for the market, obviously, highlighted by the, over the weekend, last weekend, the U.S. China trade truce, as I'm calling it, with a big up day on Monday. But, impressively, even since then, despite the fact that we had a big rally before that Monday gap, the indexes have been handling themselves well. Now, near term certainly could pull back. The quote unquote, some of the good news is out, so to speak, but we're really not seeing much selling in much of anything to this point, which I think is a good sign. Intermediate term basis, most of the evidence at this point is turning positive. The trend turned up, intermediate term trend turned up last Friday, so that's obviously in good shape. The broad market's relatively healthy with, a few stocks hitting new lows. And even like our aggression index, which is, the NASDAQ versus consumer staples, so growth versus defense, so to speak, that's turned positive on an intermediate and possibly even longer term basis. So that's all to the good. I would say bottoms up evidence has improved this week. We did see some more breakouts. We did see some more stocks, acting better, especially on the growth side. But I would just say at this point, the vast majority of the action's been sort of the off the bottom crowd. There's very few stocks hitting new highs in the market. And that's not really, I don't view that as a bearish thing at all. It's just more descriptive of where we're at. Obviously, if the market's going to keep going higher, over the next 6 months or whatever, we're going to have to see some stocks hit new highs. So I'm looking for that to happen. But until it does, at least for individual growth stock portfolio, we're just kind of not slow playing it, but just taking things if and as they break out. When they break out, we'll buy them. If they keep going, we'll average up. But until they do, we're kind of, we're not anticipating it. In Cabot Growth Investors model portfolio, we probably made more moves this week than I have in any week. I don't even remember. I mean, we had like 2 or 3 sells and probably 5 buys and all this. We're still about 50-55% in cash. But again, there's a lot of names we're watching, a lot of names that look pretty good. So if we can maybe digest here for a week or two, and then some of these names break out and some of the names we have keep going, we can average up on them. It wouldn't take us long to get heavily invested. But as always, I like to see it happen first rather than anticipate it, just in case, some new news comes out and the market pulls back for the next 2 or 3 weeks. Overall, though, I am optimistic that, higher prices are ahead for the market and for some future leadership. Okay, that's enough of a preamble. Let's hop into the charts. As usual, I'm using a program called MarketSmith, or I'm starting with it. It's a product of Investors Business Daily. You can learn more at marketsurge.com, excuse me. So we'll just start. Nothing too revolutionary here, but we were waiting for this. The way our intermediate term system works is for this 25-day simple moving average to turn up. It did last Friday, and right now we're dropping off. I didn't count it out, but we're dropping off this sort of area here, and that's why the 25-day line is accelerating higher so quickly. Okay, but obviously we still have a lot of daylight here. So if the market did pull, say there's some renewed trade tensions, tariff fears, economic fears, whatever, I would say a lot of the fears on that front have been kind of pushed aside here in the last month, which is great. That's why the market's up. But, it wouldn't surprise me if we get kind of a, ebb and flow here. But there is plenty of room to kind of pull back here on an intermediate term basis. I mean, I wouldn't want to see it all the way down here, but you could easily pull back a few percent in something like the NASDAQ and still be well within normal activity, okay? We are getting, I'm not a big support resistance guy. Maybe everybody puked out here and there aren't any sellers left at the top. But you are kind of back into a lot of resistance zones in the indexes, in small caps, big cap, all these different areas, and a lot of individual stocks we're looking at. So we'll see. Obviously, the less pullback and the more grudging it is, the better. We'll just have to see how it plays out. All I know is the intermediate term trend is up and it's acting, it's acting much better. And you kind of combine it with the still poor sentiment, the 3-day thrust, the panic selling at the bottom, all that stuff. It should bode well, generally speaking, going forward, okay? All the indexes on an intermediate term basis, same sort of thing. S&P 500, again, you're back into sort of some resistance area, but no sign of weakness yet, and plenty of daylight here if we did pull back. New York Composite, just running through them, same sort of thing. Small caps, this is the S&P 600. Not nearly as strong overall, okay? You can other indexes up here, but you can see on an intermediate term basis, certainly higher than it was 5 weeks ago. Same thing with mid caps here. Not as strong overall, but clearly an intermediate term uptrend. Growth is kind of, I would say it's been more of a liquid, like I said, off the bottom move. This is the FFTY, which is not a perfect representation of like the IBD 50 or growth stocks, but it's one of them. It's a thinly traded fund. I'm not recommending it. I just track it as because they own a lot of the stuff that we look at or own. And you can see it's certainly been acting well here. Again, 25-day line moving up, so the intermediate term trend is up. But, it's certainly lagging compared to what you're looking at with the NASDAQ and the S&P 500, okay, stuff like that. So that's on one hand. On the other hand, if you do, and again, some of this might be big cap stuff, but, this is the SMH, which is chip stocks, which has really been, was the leading group, but really topped out and lagged for many months last year and then got caught up, obviously, in the slide this year. That's a weekly chart. But this has been a very impressive snapback. Yes, again, like everything on the planet, pretty much, you're back into an area of resistance, but it is kind of, I find this pretty encouraging that it's sort of already gotten back. I'm going to eyeball this and say 90%, 80 to 90% of the meltdown here. That's pretty good. You look at Hack, which is sort of cybersecurity, same sort of thing. I don't exactly know what the fund owns, but I do know that there's a lot of cybersecurity stocks that act well. Kind of a V bottom here, and I will say the whole group reports later, so they're going to start reporting earnings 2 to 3 weeks from now, like 3, 4, 5 of them. Okay, so we'll see how it goes. But certainly a great sign of relative strength. And then like IGV, which isn't my favorite. I think it's pretty weighted towards, the big cap software names. But either way, the software ETF, again, compared to where, the break here was in, just to go back to the NASDAQ, the break was February 20th. Okay, we topped out. Technically, the peak was in December, but basically we topped out here, and then it's boom, okay? So to me, that's kind of the point of measurement you want to measure. You can measure from the lows too, but if you're measuring stuff, if it's already recouped 80, 90% of that, that's a pretty good sign, okay? So anyway, there are a lot of growth stocks that are acting well. I wouldn't say there's many that are hitting new highs yet. So if you're looking at the top relative strength names, it's been tricky. Some look good, some got hit on earnings. Like I said, there's a lot in the medical space. We mentioned some last week, like TGTX and stuff like that were holding up well, hitting new highs, and then just basically have completely failed, at least on an intermediate term basis. But overall, I think it looks pretty good, okay? Now, I did want to hop over and just show you if I can do this real quick. We are going to look at stockcharts.com, if I can pull it up here. There we go. And I just wanted to show you 2 quick tabs, then we're going to get back to the charts in terms of stocks. This is just a 5-day moving average. I think you can see it, yeah. A 5-day moving average of the new highs in the S&P 500. Okay, which is not a key, it's not a main indicator for me. The reason I'm bringing it up is just, even within the S&P 500, which is like the big caps, and that's probably one of, the best acting index or one of them, you can see that on a 5-day basis, it's actually been fewer stocks have been hitting new highs now than they were back in early April, like in terms of that sort of rally. You know what I mean? So that's not really, even though the market's higher than there. So it's just a sign that, it's not a big thing. I'm not trading off this. I'm just saying, whether you're looking at new highs in New York or whatever, there's just not many stocks hitting new highs, and those that do tend to stall out a bit, and then the money rotates into something else that's down 20% or whatever. If the market's going to keep going, that's going to change, and I think it will. I think the odds favor it will. I'm just saying, going at it where it is right now, that's where we're at. The other thing is just a more positive. This is our aggression index, which is, it's not something, I was thinking about maybe I put it in every letter in Growth Investor as one of our timing indicators, but it's more of a confirmation thing. It is secondary, but it's just the NASDAQ versus consumer staples, which is the line that's going up and down. And it's just like the intermediate term signals we're looking at with the major indexes, the 25 and 50-day moving average. And it's just, you can see it's been doing the same thing here, with the 25-day line is now accelerating higher, and it's clearly recouped quite a bit of the, decline since February. So, to me, that's a good sign that not only is the NASDAQ ramping, but it's not just a couple of stocks and then everyone else is piling into, Johnson & Johnson and Coca-Cola. The defensive stocks are also kind of suffering, which I wouldn't say they're suffering, but they're kind of just treading water here while the rest of the market goes up. So that is a good sign, okay? Just a couple secondary things that I'm keeping an eye on. But anyway, let's hop back to the market surge here. Sorry for I wish I could do this a little bit more smoothly, but that's the way life is. Okay, now we're into individual stocks. Like I said, there's a lot that look good, and this one is hitting new highs, but it's a little crazy. So let's see if we get some entry points. This is Coreweave. It's very liquid. It's obviously very new. The growth here is insane. They're kind of a I don't want to say like an Amazon Web Services, but sort of like that, almost like just built up for the AI. So almost like an AI platform company that other people use to train models and whatnot. Revenue growth is just, like I said, it's insane. It slowed down to only 420%. And this is at scale. It was almost $1 billion in the quarter. And you're going to see the stock is, went from 60 to 40. Now it's back to 80. So it's kind of crazy. But this is one that it's very liquid. And my thought is, say the market does pull back or something. If you do kind of just get a little, I don't want to say it's going to be tight, but if it can kind of settle down here for a couple of weeks, maybe it provides an entry point with a loose stop. But just a name I wanted to highlight. These are all just kind of no particular order, okay? So this is Next Tracker, this is Solar, which in market history, you often get, this is just something to realize, and I'm not getting into politics here, I'm just saying this is for investments, like, Obama was viewed as anti-gun or whatever, but gun stocks did great, I think oil stocks did well under Biden or something, and he was, wanted more clean energy. And solar stocks, I think, did very well under Trump, but he was more oil. So things can kind of be contrary or whatever. So I have been keeping an eye on some of the solar names. They are news driven. There's, the tax bill might affect incentives and all this stuff. But all I know is that this company's been very profitable. It's built this huge consolidation. Obviously, nobody likes solar stocks. And then you have kind of a pretty decisive move this week on earnings, and some of that, I think, tax news looks less bad or whatever. But anyway, NXT and some other names in the group might be worth keeping an eye on, okay? I'm still watching Bitcoin. I still think it looks pretty good. Again, if this was a stock, you'd say this is how you want the stock to look, with the tightness at the lows and the recovery, and now it's kind of starting to chill out near its highs. Mike, isn't this a double top? Of course, it could be, and that's what we see with a lot of stocks and indexes. So if we come in next week or 2 weeks from now and the thing is crashing down here, yeah, that would be a bad look. But as it stands today, it's come through this correction in fine shape, and frankly, a little bit more consolidation in here might set up, kind of a breakout attempt. I am going to mention MicroStrategy. This stock is very volatile. I mean, very volatile. So, it moves 5-10% a day. So if you buy it, small positions and loose stops. I'm not recommending stuff on this video, but this is sort of leverage to Bitcoin to the millionth degree here. Had a nice persistent rally here, starting to pull back. Looks pretty normal overall. And if Bitcoin breaks out, odds strongly favor something like MSTR will too, okay? I mentioned cybersecurity earlier. Here's CrowdStrike. Now, this does report June 3rd. Like I said, a lot of them are reporting the very end of this month or early June. So that is just the way it is. But I would just say that, bigger picture, and we've mentioned this before, it was a leader. It had its huge snafu, failed update, whatever you want to call it. But it came all the way back, and it actually broke out here for a few weeks before the market got in the way. But it had a very normal correction during the market meltdown. And this is kind of what I'd like to see. This would be perfect from a lot of stocks. I mean, who knows what happens. But it's kind of hacked around here, a little bit of selling. But it's just hacked around for a couple of weeks. Looks totally fine. Let's see if this can really break out above 450. But overall, that's kind of a nice pattern. I mentioned chip stocks too. And so I'm going to mention two of the most popular ones, which I really haven't in a while. This is Nvidia, which everyone knows, and the stock effectively topped out here in last June. Okay, it kind of barely moved out to new highs here, but that was the end of the big move. Okay, since then, a lot of times if you do undercut this, and I've mentioned this before, it kind of resets the longer term advance. So the stock did undercut the prior low, basically hit an 11. It didn't hit a yearly low, but pretty close. And now it's starting to ramp. Huge volume support at the lows, and now it's starting to ramp. I wouldn't say it's ramping on huge volume, and they do have earnings later this month, May 28th. But this is a name where if the growth story in AI infrastructure is still going, this is what you often see is like the stock will have a deep correction. It will go dead for a year or whatever, but then eventually it gets going again. I mean, Cisco did that all the time in the 1990s. Okay, so maybe that's something that's going on here. So I am just kind of keeping a distant eye on it. I'm not, even if it does get going, I'm not expecting this again. That was sort of the initial wave, but it certainly could be a liquid leader. AVGO, or not AVGO, I would say that Broadcom, different pattern. It was in more of a steady uptrend and a sharp correction here, but it has come back. Again, huge volume support at the lows. Not great volume on the way back up, but let's just see how it goes. Again, if these things can kind of consolidate in here, this one reports earnings June 5th. If we're here in 2 or 3 weeks and all of a sudden it's an earnings gap up here, I have to say that would be pretty tasty, even though they're not unknown or anything. I prefer fresher leaders, but they look pretty good, okay? Just some others. Amphenol, these things don't get a lot of attention, but APH looks great. It's been in top 10. Huge volume here off the low, and then after earnings, I think it was like record weekly volume. And this is just what you're seeing. It's just no real pullback. My guess is the first pullback, unless the market really gets in trouble with some of these, will be buyable. When that happens, is it starting today? Is it starting next week? In a month? I don't know. So I'm not saying go chase it, but some of these things you can sort of target. And if the market does come off, there's probably a lot of people that are looking to add exposure, okay? APG, not a huge fast-growing name, but again, you just have some of these kind of industrial stocks almost that are just powering ahead. You can just see the volume pattern here. You know, earnings estimates are kind of mundane, but clearly the market is thinking, you know, things are going to start to accelerate, or the results will certainly be better than expected. Deere, again, not exciting, but like DE, this is sort of on the industrial, huge base. And it has, the one thing I would say about this one, it has shown over many months a lot of volume clues as the cycle, you can see earning, this is the earnings line, this green line, is still going down, but people are anticipating it turning up. Deere has a history of trending pretty nicely when things go well. So it's not going to change the world. It's not going to go double in a month, but this does look like people are anticipating business getting better, you know, sooner rather than later, and a breakout to new highs. NRG Energy, you know, this was one. Some of the other utilities don't look as good. NRG actually was kind of a laggard during the last, you know, compared to like Vistra and Constellation, but a huge earnings gap, not just 1 day, but 2 days. And it's only been a couple of days here, but holding pretty tight. So just mentioning that. And then again, you know, since so much of the action has been off the bottom, I'm at least looking for names that either could set up and pull back or just have shown some volume. So here's Cloudflare, which did kind of have this nice breakout. This was almost like CrowdStrike, where it did break out for a few weeks, but then the market topped and forget about it, right? That wasn't gonna work, and it had a very deep correction. But it's been coming back, but they reported earnings last week, I think it was, late last week. And it had a little bit of a gap here, which was like, yeah, it's okay. But then since, you know, it comes in this week and it's like every day, you can just see 5 straight days of big buying volume, which to me, at least in the near term, will provide some support if it does pull back, okay? And the same sort of thing, although it's a worse chart, but this is Astera Labs, which we talked about last year, is one of the newer AI sort of networking chip companies. Had a big run and a big decline, as you can see on the chart. But it kind of bottomed out here. I mean, it's easy for me to say. It's still, you know, went from 60 to 47 while it was bottoming out. But again, you're just starting to see, it might be hard to see here, but you had 5 total days of above average buying volume out of 6 days as the stock kind of popped above the 200-day line. Obviously, there's all sorts of overhead here. It's not my kind of stock, but some of these things have been working, you know what I mean? Especially as trades, or, you know, so will it be up here in 3 weeks? I don't know. Maybe it comes right back down if the market does, but I have seen some of the buying volume there, and the numbers are still pretty good too, okay? So back to the market, we'll see how it goes. I mean, I'm pretty bullish and optimistic, but I'm also half in cash. So like, actions speak louder than words, I guess. And if the market did, you know, start to pull in, something happens over the weekend, the Nasdaq gaps down 2% on Monday, you know, that sort of thing could easily happen. And I wouldn't say we have very well-defined leadership yet. I wouldn't be too worried about it initially, because like I said, there's a lot of daylight to pull back with the indexes, but I just want to see more leadership develop. I think it will, and if the market goes higher, it will. I mean, the market can't go higher if there's no leadership and things are just coming off the bottom over the next many months. But at the same time, I'd like to see it happen first. I'd say, you know, a pullback here would be logical. Let's see how some of these stocks I just mentioned and others in prior weeks handle those pullbacks. If they pull back normally and kind of base out, like I said, and then get going, that would be ideal. If they implode and next week, you know, a bunch of the stocks that we're talking about are down 14%, you know, probably not ideal, you know, so we'll take it as it comes. But you can always, it's good to game out these scenarios, but I think best of all is just to go with what's in front of us. Most of the evidence, at least on an intermediate term basis, is positive. The bottoms up evidence still needs some work, but it's getting a little bit better. So that's really the main thing we're going to key off here going forward. If we do get leadership to kick into gear, either right away or after a pullback, it would be highly bullish for the market. Okay, that's all the time I have for today. Thanks for watching. And as always, come by again next week for another Cabot Weekly Review.